So what I want to talk about today is how whole life insurance saved my business. I'm not kidding. It literally saved my business. So the story is actually based many years ago, and it goes a little bit like this. Shauna, who's our director of operations, had just started working for us not long ago. And we were going about business as usual. It wasn't the same businesses as we're running today, because this is probably almost 8 years ago. But I'm in my office, and I'm just going through the day, doing the things that I normally would do, and Shauna walks into my office. But she had a worried look on her face, and she had some paper in her hand and what looked to be a check. And she said to me, almost in a teary-eyed kind of look, "Should I be looking for another job?" I was totally taken back by this. Shauna was doing a great job, like she was just crushing it. I didn't know what she was talking about, and that's what I said. I said, "What do you mean, Shauna?" And she says, "Well, I'm just concerned. Should I be looking for another job?" And she holds up her paycheck. And I'm like, I don't understand. She said, "Well, Chris, I checked the bank account," because she had access to the bank account. I checked the bank account, and there's not enough money for me to cash the check that you just paid me. Now, I had no idea. Just sometimes when you get busy, you're not checking the bank accounts all the time, and I didn't even think that that could ever happen. I didn't think that we would have drawn the accounts down so much that her paycheck wouldn't have cleared. So I thought about this for a second, and this is back when business was tough. We had just started money school. We were running a company called Flip Out Academy, teaching people how to flip houses and do real estate. Money was very, very sparse, I guess is the word. We literally didn't have much capital, but I couldn't lose Shauna. So I thought about this for a second, and I had this idea. You see, I was using the infinite banking concept, but I was using it just for myself, just to pay off my debts, which, believe me, I had plenty of debts. And I thought, I've got cash value in one of my old whole life policies. What I'm gonna do is I'm gonna take a loan from that policy, I'm gonna lend it to my company, and I'm gonna have enough money to make sure Shauna can clear this paycheck, but also 6 months worth of paycheck. So I said to Shauna, I said, "Don't worry about that. Can you give me a few minutes? I'll get money in that account in a couple days." She didn't know what I meant, but she said, "Okay, thanks. Just let me know if you need anything." I immediately went online to my policy. I took a loan, a max loan. That money showed up in my personal bank account, not a few days later. It was literally the next day. And then what I did is I did a note, a promissory note, because you have to document this stuff. That promissory note said that I, Chris Naugle, was lending my company, Flip Out Academy, because that's who payroll was done through, $10,000, and my company, Flip Out Academy, was gonna repay me at 6%. But I didn't put payment terms in there because I didn't know when Flip Out was gonna have the money to repay the policy. So I just said, I'm gonna lend it to Flip Out for a period of 5 years at 6%. Did you all follow how I did that? I had money in a whole life insurance policy from a long time ago. I took a loan from that policy for $10,000. That money hit my personal account. I then took my money from my personal account and I lent it to my company at a rate of 6%. Now, let me just give you some of the specifics about this. My policy, when I took 10 grand out, is still earning interest and dividends on the full 10,000 because I didn't use my money. This isn't like if I had 10 grand in a personal bank account and I lent it to my company. No. I had 10 grand in the policy. I took a loan from the policy, which means the insurance company lent me money from their general account. My 10 grand in the policy collateralized the $10,000 loan the insurance company gave me. And the insurance company will never ask me for that $10,000 back because all they're going to do is if I died the next day, they're going to subtract $10,000 from my death benefit and call it good. Because they made a promise in a contract that the day I die, they're going to pay a death benefit to my beneficiaries. So if I take a loan from their general account, they just subtract it from my death benefit and call it good. So now I got $10,000 in my company, which is more than enough money to cover her paycheck, give her the confidence that I'm not gonna go belly up here, while she's trying to help me build the company. And she didn't even know how this happened until many years later. Now, here's another funny thing. I was able to make those payments back to my policy. Flip out, what I did is I set up a bill pay. Not far after that, we got back on our feet, we started doing money school events, and I started having revenue, more revenue than we did then. So what happened is my company wrote a bill pay check every month, out of sight, out of mind. I didn't have to think about this, and it paid me that check every month, 6% annualized. So if we go back and we do the math, I took 10 grand from my policy and I lent it to my company. My policy's still earning interest and dividends on the 10 grand. The loan that the insurance company gave me, they did charge me interest. Now back then, it was 4% interest. How much did I say I charged my company? 6%. So 6 minus 4 means I made a 2% spread. Plus, on top of the 2% spread I made, because my company paid 6 and it cost me 4 to use the money, that's the 2%. But my policy with that insurance company at the time was paying me 5.5%. And I was earning 5.5% on $10,000. So I literally made money twice on that $10,000. I made a spread plus the interest that the 10 grand was earning. And here's the funniest part. Not only did it solve the problem, maybe save the company, definitely saved Shauna from going off the deep end thinking I'm not gonna be able to pay her, but what it also did is it allowed me to make those payments from my company back to myself, and I did that for a long time. I had a term of 5 years, but I think I repaid myself all the way up to last year. And why did I do that? I just forgot to stop the bill pay. And the company had the money and just kept paying me, kept filling my policy up. It was a great thing. Now, since that point, folks, I have used my policies for so many things in business. Things like funding marketing campaigns. I mean, by now, you're watching this YouTube video, you probably know we spend $1 or $2 on marketing. We do a lot of ads on social media. We do lots of events. We do all sorts of stuff. Every one of those things costs a lot of money. But back a while ago, I would fund a marketing campaign with a loan from my policy. I would take a loan from my policy, lend it to the company. I always charged my company 6%. Why 6%? Well, because I could go to the bank and get a loan for a little bit more than 6. So I figured if I ever had to explain this to the IRS, I have an equitable benefit. My company is benefiting from taking the loan from me, my private banking system, versus taking it from the bank. You see, you got to think of things like that. Because if I charged my company 15%, but my company could have legitimately went to a bank and borrowed at 7%, the IRS would have been like, well, why wouldn't you have just taken money from the bank? So 6% was my number. That marketing campaign had a huge success. And what did I do? Made monthly payments back to my private bank, 6%, just chipping away. And every payment my company made back to my policy was repaying the loan to the insurance company. And if the insurance company back then charged me 4% interest on the loan, they're charging me 4% on a declining balance. So if I figured out the APR each year, was it 4%? No, it was less because it was 4% on a declining balance, while my balance inside my policy was compounding up at a rate of 5.5 over and over. One was going up, the other was going down, and I lost no liquidity of my money because every one of those payments I made back to my policy as a loan repayment, yes, they were in my account available the day the check cleared. Recently, I did something I think is kind of cool. I funded a copy machine. You know, one of those big industrial copy scan, prints like 1,000 pages a minute. I don't know, that might not be the case. And it staples them, it folds them, it correlates them, it does this, it does that, it chops, it slices, it dices, and it's a copy machine. But they're very expensive. Now, we've had one of these machines for a while, but we always leased it. Now, if you own a business, I bet you have one of these, but I bet any money you lease it. Now, why do I know that? Well, when the copy machine salesman came over in his nice brown suit with his brown tie, sat down and he started explaining to me, and he said, Chris, hey, that copy machine you have is gonna be irrelevant in the next coming years. They're not even gonna make parts for that. So your lease is coming due, but I've worked out a really good deal. we can get you the brand new deal that slices, dices, chops, and smashes way faster than the old one. At almost the same price, it's only gonna cost you $10 more per month. Now, if that were you, you'd be thinking, that's not too bad. $10 more, it actually staples, it folds, it correlates, it does more pages per minute, it's more efficient from a toner standpoint. Like, what a bargain. Only $10 more a month. To lease this fancy machine was $189 a month for 3 years. This should have been a done deal. And to me, when he said that, I'm like, oh yeah, that's not bad, Shauna. Because Shauna was in the meeting again. She didn't leave. And I'm like, what do you think? She's like, I don't know, it's not too bad. But then I had like this flash come over me and I'm like, wait a second. Hang on, Mr. Copy Machine Salesman. How much would it be if I were to just buy the copy machine outright? And you know what the copy machine man said? Nothing. He literally had never been asked that question. To the point where he says, you know what? No one has ever asked me that. I'm gonna have to check and see how much this machine could be sold for. I'm like, yeah, why don't you check? So he goes back and he sets another appointment, comes back. He's got the lease arrangement, $10 more a month, $189 a month for this fancy dancy machine, or $8,600 to buy it. So what do you think I did? I ran the math. I said $189 a month times 12 times, it might have been 5 years now that I think about it, times the 5-year lease. Do the math. If you did the math, that's $11,340 over 5 years. And I apologize, I said 3 years. It was definitely a 5-year lease. Remember, I could buy the machine for a little more than $8,000, but if I leased it at $189 a month, only $10 more for this better machine, I would pay over $11,000. So why in the world would I pay their bank when I can pay my own private bank? So what I did, I went into that whole life insurance policy. I took a loan for that $8,000 and change. I paid it to the copy machine repair salesman. He wasn't just a repair salesman, he was also selling them. And he was flabbergasted that anyone would be so stupid to buy the machine outright. But I explained to him, I said, listen, I did the math. I'm gonna borrow this money from my policy. I'm gonna lend it to my company at a rate of 6%. And then I'm gonna do the math, and that's gonna work out to be $189 a month. At $189 a month, times 12, times 5, I would repay my private banking system back $11,304, the same dollar amount I would pay to lease the machine. But you see, the difference is, at the end of the 5 years, if I lease it, I have to sit back down with you, buy another one of these machines, lease it for $10 more a month then. I don't control it. Now I own the machine. And in 5 years, I'm sure you're gonna show back up in the same brown suit with the same brown tie and those glasses, and you're gonna say, this machine's gonna be antiquated. And what I'm gonna do is I'm gonna buy another machine. I'm gonna make the same lease payment you tell me to make to your finance company back to my banking system, and I'm gonna come out ahead. And I gotta believe somebody out there would buy a 5-year-old fancy dancy copy machine. And even if they don't, I'll basically give that thing to a charity, a church, some organization or foundation that needs it, and I'll get a tax write-off because it doesn't matter. I'm getting all the money back for any of those fancy dancy copy machines that I ever buy, use, and trash. That's all I'm doing, folks. I'm becoming the bank. And I did it to save my company, to save the morale with Shauna. I did it to do marketing campaigns. I did it for copy machines. Folks, what's next? You see in this building we're in? This is our brand new studio. What do you think financed this? Did I go to the bank and take out a loan from the bank to finance building this studio and buying this building? Oh no. I took a loan from my policy. I lent it to a new company that I just started. I brought in a couple partners to buy the building, and this company, actually, hold on, there's one step further. My company, Money School BYOB, rents from Think BYOB, and Think by BYOB owns the property and makes payments back to who? Me, my private banking system. Folks, I don't understand why people sometimes question the infinite banking concept. I don't understand why people call it a scam. They say it's too good to be true. I don't understand why people say it doesn't work, because it's just mathematics. If you understood everything I just said, which I hope you did, because there's nothing complicated about that, you would understand the math. The only piece I'm not showing you, because it doesn't matter, is how much my policies have grown to, because I'm not giving money to somebody else's bank. I'm the bank. I'm in control of my money. And because of that, my money is working for me 24/7, 365 days a year, for as long as I remain my own banker. Why would you not do this? Why would anyone not do this? I don't care if it's something small or something big. I don't care what you do it for. But right now, how are you doing all the things I said? Your copy machine repair salesman is coming in and you're leasing that. And you never even did the math. You're buying cars and you're buying them either leasing or financing them through somebody else's bank, making payments, not even doing the math. You're doing all the things I'm doing, except for the difference is the checks I'm writing back to the bank are going back into my bank. The checks you're writing to the bank are going into their bank, and you're getting no benefit from them, and you're making the banks richer, you're making the institutions richer, and you're making the system richer, and you are having a harder and harder time getting ahead. And the only thing that's different is you got a bunch of holes in your boat, and those holes are called loan payments to someone else. Folks, I hope you enjoyed this story. If you like this video, then you will love this one right here. It's called BYOB Bank. Check it out. And also, take back control of your money. See you on the next one.